Hi guys, welcome to the Trading Titan podcast. Another episode, of course. I hope you guys have had a wonderful week, and as we draw closer to the end of the week, I hope you guys are looking forward to the weekend, as we always do. Today, we're going to take a look at patience, right? Patience pays. Now, it's going to be a look back to one of the trades that we did about 3 weeks ago. So it featured on one of the other podcasts, the prior podcasts. And on that trade, it wasn't going well, right? It was going sideways. And I said, you know what? When things are not going well, you have to have faith in your idea and your whatever it is you're trying to do, right? So today's quote: "A setback has often cleared the way for greater prosperity. Many things have fallen only to rise to more exalted heights." Seneca, right? So again, as you guys know, I love my Stoic quotes because I think from a trader's perspective, you need centering, right? And sometimes it's not enough to center someone from a modern perspective, and I think it's very important we go back to history to realize that the problems we experience, not just in trading, in day-to-day life, have existed since the Greek times, the Roman times, and they're always going to be challenges, and we should never be afraid to face those challenges. And there is no ego involved. You face a challenge, you have to overcome it, right? And you can't fall back on your ego and say, well, guess what, how could this be happening to me? I am so special. The truth of the matter is that is a very sort of strong millennial idea that everyone's special. Well, newsflash, guys, no one's special. And that's just the truth of the matter. None of us is special. It's about doing the genius, if you could put it that way, or doing the unexpected, or being different, if as the case may be. And I think, we all kind of find what suits best, right? So the importance of this quote overall is just really about understanding that when things go bad, they tend to go good at a future point. So the idea is to stay patient and just hang on to it. But without much delay, I'm gonna punch over to the actual trade, which was dollar Swedish krona, and we shall have a look at what's just transpired. And obviously patience is paying off quite well now, and let's take a look. Okay guys, so today we're going to look at the trade that I've got going on dollar SEK. I actually have another one this week on EuroCAD as well, but I want to talk about the dollar SEK trade because with the Trading Titans podcast, we're doing a lot of gap trades, right? So we're trying to bring the concept of market profile, which is market inefficiency, as well into the spotlight. Now what you're doing is you're looking at the trade I put on for the gap in value. And for those guys who actually remember that particular podcast, and you can sort of reference back across the podcast, I was actually looking and I was talking about when things get tough, right? And when things don't go to plan, and we kind of have to be patient and sit on our hands, right? So I was looking to trade the gap in value about 3 weeks ago, right? Technically speaking, almost 4 weeks if we include this week. And it didn't happen, and it just fell back. And the importance here of staying with the concept that the market is going to come back and deal with its inefficiency is what is going to keep you alive. Now, obviously, the market tanked. It looked like there was no end in sight, right? So again, this is another importance, is that you kind of have to have enough capital if you're going to participate, right? So you got to kind of position size everything. So capital has to be relevant to the size you can handle, right? So I kind of had to stick with this trade for 3 weeks as it went against me, with only the expectation that I really just want the gap in value. At this point in time, we have an extended week, and I'm fairly confident at this point that we are going to get the gap in value. All right. So at this stage, if you wish, you could break even the trade and say, well, you know what? I've come this far, right? I'm not going to see this market go against me, right? So I'm going to break even this trade. So I'm going to sort of eliminate the risk, right? And this is one of the ways that you can go about using stops. So what I'm going to do at this point is just activate a stop, right? Which wasn't there before. And this is probably the only element of risk management that I'm probably going to show you guys on the free podcast, so you can have an idea, right? And then I'm going to just roll that stop there to even, right? So now I know this trade is risk free. So that goes in one direction. If it comes back here, I don't want it anymore, right? Because it should do the gap now. It's now or never, right? So I've kind of deduced that I'm comfortable putting a stop in place to protect the position at this stage, right? At the point when we were going down, there is a risk management element, right? But I work on market inefficiency. I work on the fact that the principles are going to hold, right? This is one way of looking at the market. Okay, it's one strategy. There are millions and millions and millions of other strategies that I'm sure people have come up with, but this obviously is what works, right? And it's all about what works. And at the end of the day, if I can get this, I have a pretty much steady P&L curve, and I can handle all the exposure the market can throw at me, relatively speaking, without actually any panic, right? So that's a pretty important aspect of when we handle it. So sometimes it doesn't always go to plan, so it kind of goes against you. So anyway, so we're looking at this trade this week, and hopefully, fingers crossed, we hit that TP, or we come out for even, which I have no problems with whatsoever, because it has absolutely zero effect on my P&L. Right, this was a bad trade that has literally come back from the grave. I could take the profits now, but I do want to see the target. Okay, so for me, I do want to hit that target, so I don't exactly want to sort of cut and run right now. What ideally I want to do is I want to see that target gone. And going forward, this is the approach that we should largely be bringing to the market in terms of understanding the best way to deal with an inefficiency. So, okay, so that's a gap trade run. Now, there are obviously points in this, and as we go through the podcast, I will talk about points when you can actually look at continuation trades. There are myriad of other strategies that offer a pretty much low risk sort of belt. And if you want to learn those, then, we have a client room that we run. It's a day trading room. We focus a lot on cable, so you can pop in there Monday and Wednesday. It's running all the time, 9 to 5. Generally speaking, sometimes even over 5, especially if there's stuff coming out of the FOMC or anything like that. So you can come in and check and see how we play with market profile, because guys, I kid you not, there are thousands of traders out there in the futures market making a considerable amount of money from market profile, right? So it's not a system, it's not a strategy, it is just a way to look at the auction market process and get a more defined idea of what's happening when you're trading. You don't want to be stuck in the archaic ways of looking at the market. And, there are many, I've got an MTA, right? So I know all the technical strategy there is to know, right? And the bottom line is that if you're actually a trader and you've actually tried some of this stuff, you'd realize that there are a lot of issues and a lot of things that need to get ironed out with some of these strategies. So again, it's just one of those things. Market profile is the raw data. Interpreting it helps you to get a sense for your own market, and you're not reliant on stuff like indicators that are clearly, they're not fit for purpose. If we're going to be honest, they are just not fit for purpose.